Another Fed day has happened, and as expected, the Federal Reserve met and decided to cut the baseline interest rate by 25 basis points. Now again, this was a foregone conclusion, so that does not mean mortgage interest rates dropped by 0.25%. But if the Fed met and decided to not cut interest rates, that likely would have reflected in a 25 basis point increase to mortgage interest rates. So let's look at this as an overall win. Now, can the Fed deliver their message in a hawkish and dovish tone all at the same time? Well, let's get into some Fed talk. Let's first clarify our birds. So a hawkish tone signifies that they look at less future cuts. Maybe there's a fear of inflation still remaining too high for the Fed's liking. So it may come across as we're going to give you this 25 basis point cut, but don't expect future cuts. A dovish tone would be more inclined with we're very optimistic that this is just the beginning of a lower rate environment. And a lot of the dovish outlook tends to be the outlook of the strength of the labor market. Now remember, due to the government shutdown, we have been suppressed with a lot of the jobs data, which is due to come out next week. The real treat here is the Fed announcing that they will begin purchasing short-term treasuries to the tune of $40 billion per month starting on December 12th. So while we may not see the same level of future Federal Reserve rate cuts, this could become very beneficial for the outlook of mortgage interest rates. So how do you look at the latest Fed meeting and if they're taking a hawkish or dovish tone? I'm going to go ahead and remain optimistic that we are more likely to have a lower rate environment and dovish outlook in the future. My buyer's agent friends, listen up. Developing story here, and we all know the requirements of a buyer signing a representation and compensation agreement up front, but a lot of people have always been confused on the level of enforcement afterwards. In this recent case in Florida, an arbitrator ruled that the buyer rep agreement is enforceable and ordered the buyer to pay the buyer's agent their 3% agreement or $24,000, even though they used another broker when purchasing a home. The broker warned the buyer about the breach of contract when alerted through the mortgage lender. Good job, lender. And the buyer ignored their outreach and even amended the agreement themselves, replacing himself with his mother. The arbitrator ruled that the agreement was clear and enforceable, even rejected the buyer's claims that the broker offered no value and they didn't understand what they were signing. We all remember the talk after the NAR settlement about how buyer agents would become obsolete and that commissions would diminish. Recent reports show that buyer agent commission is actually up from the settlement. Maybe another big reason why you should not use the builder lender when purchasing new construction. DR Horton and DHI Mortgage have been hit with a RICO Claims Act violation and lawsuit claiming that they under-disclosed initial escrow payments, basing the taxes on unimproved land assessments. So what they basically did was make the initial monthly mortgage payments artificially low due to under-disclosing for the proper amount needed for escrow accounts. Once these mortgage loans made it to the mortgage servicer, boom, payment spikes and demands for the taxes being caught up. Plaintiffs in this case argue that the scam misled buyers into buying homes that they otherwise wouldn't be able to afford. Some buyers even reporting that after reassessment, their monthly mortgage payments increased by over $1,000 per month. Well, that's one way to sell a new construction home, but I'm utterly confused how they would think that this would ever be a practice that they would be able to continue going forward and not eventually catch up. This is another reason why it is utterly so important that you use a mortgage lender that you trust and has credibility.